Hello traders, The title of the video is Fibonacci pattern trader finally reveals his favorite Fibonacci pattern. What is your favorite Fibonacci pattern? Is it Gartley pattern? Is it bat pattern? Is it butterfly pattern? Is it the crab pattern? What is your favorite Fibonacci pattern? All right. So today I want to share with you my favorite Fibonacci pattern and also explain to you why it is my favorite Fibonacci pattern. All right. Very often when we talk about a Fibonacci pattern, traders will say that, George, I already know everything about Fibonacci pattern because traders know about the theory of the Fibonacci pattern. I'd like to encourage traders to watch the full length for this tutorial. But before I forget, be sure to subscribe to this channel today and make sure you click on the notification bell so anytime we record a new video, you will be the first person to be notified. More amazing tutorials are in the pipe. So looking at this chart, okay, we have, so there are two conditions that should be in place before we can start talking about Fibonacci pattern. Is that we must have a trend and then a correction. A correction in normal condition should not cancel, okay, the trending phase. But sometimes it will cancel it. When it cancels it, we'll talk about speculative Fibonacci pattern. All right. So here we have a trend and a correction that did not cancel the trend. Now, the financial instrument that we are analyzing today is Google Alphabet Incorporated, EPIC GOOG, Golf, Oscar, Golf. So those two conditions are in place. So now if I recognize a Fibonacci pattern, I will know that that is a valid Fibonacci pattern. Knowing the I need to be careful. That would be if I see after that those two conditions, a Fibonacci pattern, I will be more willing to trade that. That's what I meant by valid. Or I will be more willing to trade it. Okay. So without going into the theory of the Fibonacci pattern, the structure, okay, of the Fibonacci pattern, if you want to learn more about the Fibonacci pattern trading, go to www.dayprotraders.com. You see a web page for crab pattern, Gartley pattern, butterfly pattern, and bat pattern, right? My favorite Fibonacci pattern is the butterfly pattern. Now, one of the reasons why it is my favorite Fibonacci pattern is because it's based on a specific market principle. So I said to traders that if you want to build a trading method or a trading strategy, you must build it on a market principle. So this, the butterfly pattern is founded, the way the price will behave, the formation of the butterfly pattern is responsive. Can we use that? Responsive to the Fibonacci is responsive to the market principle based on a 50% Fibonacci retracement. So there is a market principle that is based on a 50% Fibonacci retracement. All right. So if you want to know more about market principle trading, you need to go to www.stochastic-money.com. Click on what? Trading tips. Once you go to the home page, you see at the top there, you don't have to go to the drop-down menu or maybe just want a little bit in the drop-down menu. You click on the page that we title Trading Tips, and you will see there. I will be when I was explaining to traders the 50% Fibonacci retracement market principle. So the 50% Fibonacci retracement will divide the price action into two zones. The bullish zone is above and the bearish zone is below. So therefore, any pivot point above the 50% Fibonacci retracement level is bullish, or any pivot point below the 50% Fibonacci retracement level is bearish. Now, I don't want to go into the detail about the 50% Fibonacci retracement market principle. You need to go and check it because otherwise the video will be too long. So now, as you can see, the structure of the butterfly pattern is that this point here is what we call X. This point is what we call X, and this point what we call A. So that's the correction. So the price action from A to B should retrace exactly the XA at a 78.6% Fibonacci retracement. Must be exact. That price action from A to B must be exactly at 78.6% Fibonacci retracement level. So that's what's happening here. I use only 78.0. You can see that. Okay, that's there. So this is the SA. Now you can see that the AB stopped exactly at 78.6% Fibonacci retracement level. So the pattern that will come into our mind, the first Fibonacci pattern that will come into our mind is the butterfly pattern. Now the B to C can retrace the price action from B to C, can retrace the AB from 38.2% up to 88.6% Fibonacci retracement level of AB. That's the retracement of BC in relation to AB. All right. Now the reason why I like the butterfly pattern is because you can see that we have the 50% Fibonacci retracement level. That's the line that I'm going to put there. Color it now into pink. All right. Here it is. So this price action from X to A, that 50% Fibonacci retracement level is in fact a psychological price level, dividing that price action into two zones, bullish zone above it and bearish zone below it, talking about this price action down here. Now look, the BC, the price action from A to B, when it's forming the butterfly pattern, the price goes above the 50% Fibonacci retracement level first. Now, because normally those are bearish traders that were controlling the price between the S to A. So the dominance was bearish. So now look, as the price was coming near the 50% Fibonacci retracement level, the bearish trader will try to sell it. They don't want it to go into the bullish zone. So they will try to sell it. But look carefully. With the butterfly pattern, the price will cross the 50% Fibonacci retracement level and will also cross the 61.8% Fibonacci retracement level and even touch exactly the 78.6% Fibonacci retracement level of this price action. Now, that price action AB, in the case of the butterfly pattern, is a clear declaration of the bullish traders. It's like a declaration of war. The bullish traders are expressing their desire to bring the price into the bullish zone. Not only that, when the price reaches the 50% Fibonacci retracement zone, the bearish trader could not stop it, which means when you see that, this is about the market principle or the 50% Fibonacci retracement level relating to the butterfly pattern. That's why it is my favorite Fibonacci pattern. So there is a capitulation of the bearish traders in this case. Okay, so normally they should stop it here, they couldn't. And not only that, the bullish trader push it beyond the 61.8% level, which means above the sweet spot zone. The sweet spot zone is the zone between the 50% and the 61.8% level. Now, it becomes very interesting. Why it become very interesting? It becomes interesting as the bearish trader finally tried to sell it at the point B, exactly at the 78.6% level, the price form a higher low. Well, what does it mean? It's telling us that those bearish traders are not serious. If they were serious bearish traders, the price will exhibit a new lower low. That's why I like so much the butterfly pattern. In theory, to cut a long story short, because if you want to understand more the butterfly pattern, which is my favorite Fibonacci pattern, go to www.dayprotrader.com. All right, read everything that I've said about the butterfly pattern. There is a web page titled Butterfly Pattern. All right, now don't read it anywhere else. Take my word for it, please. Okay, now we are talking about market principle here. Now, it became very interesting. So they couldn't form a new lower low. All right, so they couldn't push it to go below this low. It's a capitulation. So we have a capitulation as the price was going above the 50% level. Now again, we have a capitulation. That capitulation was well established. Can we use that? Well established now. After this common central line is broken, this one, the BC common central is broken, and the price for the second time goes back above the 50% Fibonacci transfer level. So they failed the first time here. They failed to form a new lower low. All right. Now they fail again as the price was trying to go back into the bullish zone for the second time. These are not serious bearish traders. One must look for an opportunity to buy at the point C during the formation of the butterfly pattern. Now, this is how I like to trade the butterfly pattern. A lot of traders, very often, how do they trade the butterfly pattern? They trade the butterfly pattern at the point D. The point D is the last segment of the butterfly pattern, meaning that from C to D. And then usually, Fibonacci pattern traders will be expecting a reversal at the point D. Did you see any reversal here? No. No. This is very interesting. That's why I like the butterfly pattern. When you see a butterfly pattern at the point D, like it's forming now after a bullish trend, all right, and you want to sell it, be very careful, because very often the price will continue to go up. The opposite is also true when we have a downtrend first. All right, we have a downtrend, and then we have that correction, and then we have A, B, C, D, and a butterfly pattern is formed. All right, and you want to, all right, buy it. All right, be careful. The price may continue to go down. So the reversal in the case of the butterfly pattern at the point D does not often happen. Why? Because of the market principle that is ruling, so to speak, the butterfly pattern. Now, this is another matter. So I say to traders that the price is the number one indicator. So we are talking about the Fibonacci pattern. And at the same time, I'm interpreting a market principle based on the price action and the 50% Fibonacci retracement level. Reading the price and interpreting the price and to understand what is happening. So I do not, this is what I like to say to traders, why is my favorite Fibonacci pattern? In many cases, when you are dealing with the butterfly pattern, because understand this, the butterfly pattern is a specific Fibonacci pattern. Now, the number one characteristic of the butterfly pattern is this price action. A to B must stop exactly or in the zone of the 78.6% Fibonacci retracement level. And then after that, the price will form a higher low. This is very, very interesting pattern. Now, understand that very often, the price will break above the point D. As normal Fibonacci trader try to sell it here, most of them will not be using the top-down trading method, and they get cooked sometimes, which is not good. Or they get zapped like flies, which is not good. Now, this to make you laugh a bit. I'm not mocking them, all right? Zapped like flies. Okay. All right. Okay. So this is one thing you need to understand. Okay. Very, very important point. So did you see that for this Google stock? Did you see that the price breaks above the point? Did people try to sell it here? Didn't go down very much. Now, if you understand the market principle or the 50% Fibonacci retracement level, you can expect that there is a high chance that you break above it. And it did. Look at the candlestick by that breaks above. So before I forget, the point D for the butterfly pattern, in theory, is in a zone of 127% Fibonacci extension of AS. So you apply Fibonacci extension to AS, but you will notice that when I'm writing about this pattern, I all how should I put it to you now? To avoid confusion, instead of saying to traders AS, I always say SA. I have a reason to that, because I don't want you to get confused. But when you are talking about Fibonacci extension to SA, it will be down here in the direction of the prime. But when I'm writing about the butterfly pattern or the Fibonacci pattern, I do not say to trader Fibonacci extension A to X. I say SA. But trader who understand Fibonacci extension or advanced Fibonacci traders will understand what I meant by that. They know that it will be up there because it should be up there, so they will apply it the other way around. So in theory, the price action from C to D for the butterfly pattern will stop at the point D is expected, choosing my word very carefully, expected at 127% Fibonacci extension of SA. SA, I mean AS by SA, all right? Right there. Can you see? So another thing I need to mention to you, because I said this is my favorite Fibonacci pattern, I do not, now, listen carefully, I do not draw my target at 127% Fibonacci extension level for the butterfly pattern. I do not like to do that. Why? Though the theory say clearly that it should be 127, because there is a better resistance, a more powerful resistance at 138.6%, 138.2% Fibonacci extension level. So instead of drawing my target at 127, I prefer to put it at 138, because in most cases, again, even if you're going to have a reverse at the point D for the butterfly pattern, in most cases, you come to 138.2% of Fibonacci extension level. Now, for traders that are very new to us, when it comes to the topic of Fibonacci extension trading, go to www.dayprotrader.com and check the web page that we title 138.2% Fibonacci extension. Go to the home page of Day Pro Traders. Say home page. Place your cursor on the word more, and the drop-down menu, select 138.2%, so you may understand why it's just one of those Fibonacci extension levels that one cannot mess up with. You can't mess up with 138.2% Fibonacci extension level. So as you can see, that's why they sold it a little bit, and because of the market principle that is governing the butterfly pattern. And here it is. This is a nice trade. So if you are swing trader, if you are TSTWS or S008 trader, take 1 week, all right, to master the butterfly pattern. Take 1 week. I recommend Day Pro traders, all right. You may say, Joe, I bet you'll say that, but I mean it, all right. And read everything that I said about the butterfly pattern, all right. Watch every video that I'm posting recently about the butterfly. This is one of them. There are more coming up soon, when I'm going to show traders everything that they need to know about the butterfly pattern. So together we all take the butterfly pattern. And if you see that breakout above the point D, which usually will happen in most cases, and probably continue to go up. So we can create a simple strategy that any higher low, any subsequent higher low above the point D in the case of the butterfly pattern is a high probability trading setup. Did you get that? So any higher low subsequent, so this is the higher low above the point D. The point D of the butterfly pattern is a high probability trading setup for traders. So we can just scale it down, because it's a declaration of a bullish traders here. Because if you have a bullish trend, and then we have a correction before the butterfly pattern is formed, it's a very bullish. Don't challenge it at a point D. And if you are challenging at a point D, it does sometimes pull back. But if you are challenging here, be careful. Be careful. Okay, trade it gently. Common center is broken. Implement a top-down trading method. Handle it with care. So your first target will be this trend line here, and then you want to watch it carefully. All right, that's what I'm saying. Okay, very, very important. So any subsequent higher low after the point D is a high probability trade. Look the way Google stock was bullish after that point D, triangle after triangle, and it's just breaking above it. Now, somebody who understands the Elliott wave trading can also combine the Elliott wave trading with the butterfly pattern. So you'll see that those who understand the Elliott wave, that the butterfly pattern can lead the price into the third Elliott wave. Did I say can? Yes, I say can. I'm not saying always. Can sometimes lead the price into the third wave. So this is the case for Google stock. You see, first wave. Our second wave is a WSY wave. The Y is a triangle here. W, X, Y. The Y is a triangle. Now we are in the third wave. That third wave is subdivided into 5 wave in green here. So is this the fourth wave or is more fourth wave coming up? Is that the end of the fourth wave? I leave it here as it is, and we are monitoring the price action. So you get it now? So go to www.dayprotrader.com, click on the web page, butterfly pattern, read everything that you need to know about it, understand the anatomy of the butterfly pattern. How does it form? Okay. If you ask me what's the best way to trade it, instead of waiting to sell at the terminal point, at the possible reversal point, at the point D, it's better to enter the trade at the point C. If you buy at the point C, your first target is the point B. Now, you can again add to your position. If you secure your gain or you grab your profit at the point B, you can again re-enter here. Look at that. It breaks above the point B. Can you see the point B? That's the point B there. It breaks above your retest is here. So you can again buy there one more time. And then if you buy again at the point B, your target is a point D at 127%. But I do know you 127%. I'll be watching now, but if the price reaches 127, secure your gain. I know that some trader will try to come out, but in most cases, he will try to touch the 138.2% level. If you are selling at the point D, be very careful because of the market principle, the 50% Fibonacci retracement market principle that is governing, okay, the butterfly pattern. You are likely to see an extension in the case of, a fundamentally valuable stock. So if you have done, for instance, a fundamental analysis, normally as a swing trader, as a position trader, as an investor, you should love the butterfly pattern. Very, very important. You should love the butterfly pattern. So the trick is that you do, for instance, your Google Assist test, okay? You do your fundamental analysis, you understand the company, and you align everything with the market. Is the policy by the central bank, okay? Macroeconomy, talking about the S&P 500, is at the beginning of the third wave and so on, not at the top of the fifth wave. Market likely to continue to be bullish. So then if we are in that environment like in 2009, as it is here, okay, at this point here, all right, at the point A, you can go around and look for butterfly pattern stock. So here, a lot of hedge funds did enter the trade at the point C here. The market, the macroeconomy environment was good. Fundamentally speaking, Google is a strong company, all right? People enter here, position trader, hedge fund, and they enter again here. People enter again here, and they are adding to position here. So they are taking profit, and they are buying again. So they take profit, they enter again, they roll it. And if they understand Elliott wave, they will know where we are now and what is likely to take place, fourth wave followed by the fifth wave. So I explain to you now, okay, why the butterfly pattern is my favorite Fibonacci pattern. So you have to understand that the Fibonacci pattern are powerful pattern. But if you understand more the market principle, you will do wonders, so to speak, with the butterfly pattern. So as I explained to you at the beginning of this tutorial, to learn more about the market principle, because I start creating a web page that I title Trading Tips at www.stochastic-market.com. At the home page, you'll see at the top straight away. I don't think it's in the drop-down menu. You see straight away trading tips. And I post so far few market principle, and I'll be adding more market principle to that web page. So you want to understand the market principle, so you can understand how you can combine them with the Fibonacci pattern. So this will conclude our discussion today about the Fibonacci pattern trader. Finally reveals his favorite Fibonacci pattern. What is your favorite Fibonacci pattern? My favorite Fibonacci pattern is the butterfly pattern. Why? Yes, I already explained it to you. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, you say, George, 25 minutes talking, nonsense. I'm not buying this. Mark it down, please. However, if you think this is an essential tutorial, feel free to share with your friend on the social media. I really appreciate it when they share our video. Subscribe to our YouTube channel. Our YouTube channel is Day Pro Traders. Be sure to click on the notification bell, so anytime we record a new video, you will be the first person to be notified. All right? Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders talking about Fibonacci pattern trader finally reveals his favorite Fibonacci pattern. Thank you for watching, and I will speak to you soon. Happy trading to you all.